Hi, it's Saturday, April 25th, 2020. PPP funding round V2 is supposed to open up in the next couple of days. And we have several firms who received funding on the first round, and we have a couple dozen firms lined up for funding for the second round. So, with all these firms with PPP cash, we need to start planning for the forgiveness calculations. So we're going to go through a couple of steps and ideas on how to get ready for the calculation and to work with the bank to have the loan forgiven. So the first thing is to ask your bank for specific instructions on the forgiveness calculation they are going to use. So probably request those instructions now and then request those instructions again in probably 4 weeks. We're seeing just still a great amount of confusion from the banks and banks providing incorrect guidance or guidance that directly conflicts SBA rules. And so it's just a moving target. But in the end of the day, it's the bank that's going to have to calculate the forgiveness amount. And so start that dialogue with the bank up front. For today, we're going to use a forgiveness tool created by our friend Joey Brannon over at Axiom Strategic Consulting. So I'll put a link to this page in our post, and at the bottom of the page you can download his calculator and you can sign up to get updates on it. He's done such a great job on this that we're probably going to borrow his. So let's go over and look at what this tool looks like. So I guess one thing we added on this tool is the first step we will do when we're helping clients is to create a budget for the payroll and overhead spend for the 8-week spend out period. That I want to see this on a per individual level, and I want to see the overhead costs at a per vendor level. As soon as we can, as soon as the firm gets funds, ideally all of these overhead payments will be made by manual check, and we're going to keep copies of front and back of those checks along with any invoices. That in any sort of audit, the more you have to explain, the more you've already lost. So as much as you can, turn off EFTs and pay with paper checks. So when we go into the audit, we can give the auditor canceled checks and copies of invoices, and there'll be very little ambiguity there. For payroll, I want to start to calculate the payroll budget by employee so we can see exact detail, because there's adjustments. And if we're going to start hiring and we're going to start having other adjustments, we need the per person detail. So on this, have payroll forecast for the 8-week spend out period. I'd be very careful on these dates that the spend out period is cash basis. So the paycheck dates are all that matters. The payroll periods do not. And there's some adjustments we need to watch when calculating payroll. So in this, So on the PPP program, any wages over $100,000 are disallowed. And so in this case, Ruby has an annualized salary of $120,000. So we need to back out her value over that for the 8-week spend out period. And if you have employees on either of the COVID sick leave credit or the COVID family leave credit, because those wages do not count for the PPP spend down, so we need to calculate an adjustment wage forecast. I'm seeing where a lot of firms are suggesting to put the COVID money or putting the PPP money in a dedicated bank account, and when that bank account is empty, it means you're covered. Well, that doesn't work very well, because firms are going to have these types of adjustments that ran through payroll. And there's also employer payroll taxes involved in payroll, which is not a forgivable spend amount. So even if there's no adjustments, those withdrawals by the payroll company are going to have at least 8 to 10% of disallowed costs, or they're going to be 8 to 10% of costs in those EFT draws that are not going to count for the PPP spend down. So with this, I just wanted to present an idea of how to calculate a wage forecast, a rent forecast, and overhead or utilities forecast. There's pieces missing here. I don't have unemployment taxes mixed in, or state unemployment mixed in here. I don't have retirement. I don't have health insurance. we would add those pieces in this calculation. I just wanted to show an example starting point. So let's go and look at the forgiveness calculator within this tool. So we have two constraints that we need to watch for the forgiveness calculation. One is dollars spent, and then two is full-time equivalent threshold, so the number of employees or headcount adjustments. So in this example, again, trying to keep this simple, had a firm with $480,000 of annual wages. They qualified for a $100,000 PPP loan. So now we're calculating out how much they can have forgiven. So one of the requirements within the program is the allowed overhead costs is capped at 25% of the loan amount. So in this example, firm received $100,000. They spent $50,000 on wages, and they spent $50,000 on rent. Well, $25,000 or 25% of the $100,000 loan puts the cap on overhead at $25,000. So in this calculation, we see that only $75,000 is forgiven, and the firm is going to end up with a loan owing back $25,000. So in this calculation, we want to make sure that we have enough wages plus allowed overhead to reach the threshold required to have 100% forgiven. So we want to watch that cap, that overhead is capped at 25% of the total loan amount. So now we have this adjusted that we spent $75,000 on payroll, we spent $50,000 on rent, and so at this point we're fully forgiven based on dollars. Then there's this tricky widget here where it says this full-time equivalent calculation. So let's go, I'm going to scroll quite a bit, so hold on. So there's 3 full-time equivalent numbers required for this calculation. So one is wages paid in 2019 between February 15th and June 30th. Now we need to calculate full average monthly full-time equivalents for that period for last year. So in this example, the average full-time equivalent is 25 people. Then we have to calculate full-time equivalents from January 1, 2020 through February 29th, 2020. And so here we have 26 full-time equivalents. The requirement is that the full-time equivalents in the loan spend-out period, so this is the 8-week period that you receive money, that you have 8 weeks to spend it. So everyone's going to have a different start date, but within this 8-week spend-out period, we need to calculate the number of full-time equivalents within the firm, and the full-time equivalents within this period must be greater than either full-time equivalents at the start of the year or full-time equivalents for last year. That you get to pick which full-time equivalent number you want to use for the calculation, so you can use whichever one works best in your favor. So in this example, I cranked around on this, that in the covered period, we have 28 full-time equivalents, and that's why there's 0 adjustment and 100% of the loan is forgiven. So let's go back, and instead of maintaining our let's see here. So up here we had 25, here we had 26. So let's crank this down to say we dropped everyone down to 10 full-time equivalents or 10 salaried employees within the firm. So at this point, we have 18 full-time equivalents, which is substantially less than the 25 at the beginning of this year, and which is less than the 25 from last year. So if we go look at our calculation, that we now have a 26% decrease in full-time equivalents, which means even though we spent $100,000 on wages and rent, we're going to have to pay back $25,000 of the loan. See here, this is kind of a silly example because If full-time equivalents decrease that much, it'd be difficult to spend out the full amount. So maybe this cash would still be in the bank. But the idea here is to understand that there is this additional haircut that if your full-time equivalents decrease, that you could end up paying back a good portion of the loan. Let's see here. There is an exception that I have not read the details. I'm going to point it out, and I imagine this is going to be something we get to learn over the next couple of weeks, that if there's a rehiring adjustment, that if we downsized and rehired, that there's an adjustment for rehiring. I haven't read through this, but if your firm did have to laid off a lot of people and then started to bring them back during the 8-week spend period, that there's this adjustment that can help. And the other thing to note is there's no requirement that says you employed an associate attorney last year to count as a full-time equivalent. That if the replacement full-time equivalent has to be an associate attorney. That if full-time equivalents are the only constraint, that the firm can hire a full-time temporary employee to bring up the full-time equivalents during this interim period so we can meet that threshold. So think, family college student or family friend college student could come in and do something interesting for 8 weeks if that's what it takes to make that full-time threshold. So this is getting long on me, so let me just kind of recap that to manage this well, I would suggest making a budget that's going to plan out your spend for the 8-week spend out period. If firms want, we can do this as an additional service. I think what we will do is we will make the initial budget, meet with the client, make sure that we're on track to see if we need to make any changes to the firm over the period. Probably get 4 weeks into this, update these with actuals, and then come back and meet with the firm again to make sure that we're on track for what we need to do. And then based on that budget, we can start doing these calculations to see where we will be for forgiveness, with paying close attention to the limitation where non-payroll costs are capped at 25% of the loan amount, and also paying attention to this full-time equivalent adjustment. And with that, very quick overview to the forgiveness calculation. Again, so today's April 25th. SBA changes the rules every day on us, so this could change tomorrow, but this is kind of where we see things stabilizing. Let me know if we can help. Thanks. Bye-bye.